$1 trillion, not billion, trillion. That number just came out of the mouth of the United States Treasury Secretary, and within hours the crypto market wobbled. The longs that survived Friday's flash crash got shaken again, and right now more than half of the traders on prediction markets are betting XRP goes down from here. If you're holding XRP right now, the next 10 minutes matter, because by the end of this video, I'm going to show you why the scariest headline of the week might quietly be the most bullish thing you hear all month. Don't click away. The payoff is at the end. But real quick, from the heart, none of this is financial advice. I'm not a financial advisor, and nobody, not me, not any YouTuber, not any bank on Wall Street, knows exactly how a trillion-dollar treasury operation plays out in real time. So do your own research, protect your family first, and never let anyone rush your decisions, me included. What's going on, everybody? Welcome back to Crypto Nexus Alpha, where we tell it to you straight with heart. No panic, no hype, just the facts. So let's lay it out honestly, because you deserve the full picture, the good, the bad, and the uncomfortable. Treasury Secretary Scott Bessent just signaled that the U.S. Treasury is prepared to unleash what people are calling a $1 trillion war chest to rescue the American bond market. Here's the timeline. On Wednesday, the Treasury announced it was doubling its bond buyback operations from $2 billion to at least $4 billion per operation. The market liked it for about a day. Then the relief faded, and the 30-year Treasury yield drifted right back up toward 5.25%. That told everyone the same thing: $4 billion isn't enough. Now, according to CNBC, the Treasury could tap into its nearly $1 trillion Treasury General Account to fund expanded buybacks. Do the math with me. $1 trillion is roughly 250 times the size of that $4 billion operation. The idea is simple: lift bond prices, push long-term yields lower, and do it all without forcing the Federal Reserve to step in. And let's be honest and grown up about this. The full trillion has not been committed. It represents potential firepower, not a signed check. On top of that, we've got tension between the U.S. and Canada, including talk of Canada cutting electricity exports, new sanctions pressure on anyone facilitating money flows for Iran, and a tech sell-off, with Samsung dipping hard in South Korea, and memory stocks like Western Digital, SanDisk, Micron, and SK Hynix all pulling back and dragging the NASDAQ with them. That's the honest backdrop. It's messy. So let's start with the ugliest fact first. Since Friday night's flash crash, the crypto market has lost the momentum it built. Wednesday, Thursday, and Friday, longs got flushed. XRP cooled off, and on prediction markets, sentiment is split almost perfectly down the middle, 51% betting down, 49% betting up. Sit with that for a second. That's real fear. But here's the question that flips this entire story. What actually happens to markets when the Treasury drains its cash account to buy bonds? It injects liquidity, massive liquidity. Money flowing out of the Treasury General Account doesn't disappear. It lands in the financial system, and historically, liquidity injections have been fuel for risk assets. Stocks, and yes, crypto. So the same headline that spooked traders on a Monday could be the exact mechanism that floods the market with fresh liquidity in the weeks ahead. That's not spin, that's just how plumbing in the bond market works. Quick question for you. Do you think this liquidity finds its way into XRP? Type yes or no in the comments. I read everyone. Now the second scary thing, the geopolitical noise. Canada talking about cutting electricity to the United States, sanctions tightening on Iran, and you already know critics will point at crypto as the tool bad actors use, because they always do. When headlines like these stack up, algorithms panic sell first and ask questions later. That's very likely part of what we saw this week. But here's what nobody's telling you. None of these stories, not Canada, not Iran, not Samsung's memory chips, has anything to do with XRP's fundamentals. Nothing changed about the technology, nothing changed about the legal status, nothing changed about adoption. This is weather, not climate. And you don't sell your house because it rained on Tuesday third concession, and this one's for the doubters, because they have a point about crypto's past. For years, XRP lived under a cloud. The securities lawsuit that started back in 2020 scared away institutions, got it delisted, and made regulatory risk the first word in every XRP conversation. I won't hide that history from you. But here's the honest nuance, and this is the anchor I keep coming back to on this channel. On March 17th, the SEC and the CFTC issued a joint interpretation classifying XRP as a digital commodity, right alongside Bitcoin, Ethereum, and Solana. Read that again. The same asset that spent years fighting for its life in a courtroom now sits in the commodity column with the two largest cryptocurrencies on Earth. So when a scary macro week hits, ask yourself, is XRP facing this storm as the lawsuit cloud asset of 2020 or as a classified digital commodity in 2026? Because those are two completely different starting positions. That's not hype. That's the scoreboard. One more honest concession. That 30-year yield sitting near 5.25% is a genuine problem for Washington. High long-term yields make everything more expensive. Mortgages, corporate debt, and above all, the government's own borrowing. That pressure is real, and it's exactly why Bessent is showing the market how big his bazooka could be. But flip it around. A government that is this motivated to push yields down and support liquidity is a government building an environment where capital goes hunting for returns. And where does capital hunt when bonds pay less? Risk assets, growth, innovation, the very corner of the market where XRP lives. The pain of high yields is precisely what forces the policy that risk assets love. The pain doesn't last forever. It never does. Now let me rebuild some trust before we land this plane, because I refuse to be the guy who only tells you the pretty parts. Here's what could still go wrong. The trillion is potential, not promised. If the Treasury moves slowly or in small increments, the liquidity boost could underwhelm, exactly like the $4 billion announcement did on Wednesday. Yields could stay stubborn. The US-Canada situation could escalate and keep risk appetite suppressed. And anyone who tells you they know the exact week XRP takes off is guessing or lying to you. What I'll be watching, specifically, the size and pace of the next buyback operations, whether the 30-year yield breaks meaningfully below 5.25%, and whether crypto reclaims the momentum it had midweek. Those are the tells. Watch them with me. Now zoom out with me, because this is the part that matters most. A few years ago, a week like this would have been an existential crisis for XRP, lawsuits pending, no classification, no institutional lane, and a treasury that pretended crypto didn't exist. Today, the conversation is about how much of a trillion-dollar liquidity wave reaches digital assets, and XRP enters that conversation as a recognized digital commodity. Headlines are sand, they blow away in a week. Classification, regulation, infrastructure, that's bedrock. And you and I both know you don't judge a building by the dust of the construction site. You judge it by the foundation. So if this week shook you, breathe. I need you to breathe. Volatility is the price of admission, not the sign of the end. We're early. The foundation is being poured, and the pain doesn't last forever. It never does. Protect your family first, do your own research, and never let anyone rush your decisions, me included. Before you go, drop a comment. Is Bessent's trillion bullish or bearish for XRP? One word, bullish or bearish, that's it. Smash the like button if this brought you clarity instead of panic. Subscribe and hit the notification bell so you never miss a breakdown like this. This has been Crypto Nexus Alpha. We're early. The foundation is being poured, and I'll see you in the very next one.